Welcome back, and joining me for a look at the equity scene is the CIO of Schimdt Family Office, Jacobus Brink. Thank you so much for your time, Jacobus. We're seeing quite significant gains there in the markets across the board. Those US markets actually surging by a lot. And I'm wondering if markets are just a little less fearful today.
Yeah, hi, Zenati. Thanks so much for having me. It's always a pleasure to be on. Yeah, no, what a difference a week makes. Eh? This time, or just more than a week ago, markets were really pricing in quite a lot of downside. Yeah, so today very much a risk-on day. It pretty much started yesterday. The market did seem to, pick up its head a little bit post the CPI reading, which came out marginally lower than expected, but the market's still obviously seeing that as a good thing. But yeah, the big thing was retail sales this afternoon that we saw earlier, up by 1% last month, beating expectations by more than quite a bit more than expected. And I think the other thing that also drove it was we actually saw the unemployment claims also coming in the lowest, I think, in a couple of months we've seen. So that's just put massive impetus into this market. We've seen some major moves today. Tesla's up 7%. Nvidia has risen by about 20% in the last week and a half. So some big moves there. I think just on the earnings side as well, another thing that's also driving this market quite a bit is Walmart's earnings. Share was up the last time I checked, almost 7%. They actually beat expectations and also had a very sort of bullish outlook, and I think that's also driving markets because we did see things like Home Depot come out last week, and they were fairly cautious on the outlook for the US consumers specifically. But yeah, no, a good day all around, it seems, and it's spilling over into the rand, into the local bourse as well.
Yeah, so really things looking quite good there on the retail side in the US, and maybe investors a little less jittery about economic growth there. Well, at China, as we were talking about retail sales, they did surprise slightly to the upside in China, but industrial production there disappointing. Of course, the fixed investment still quite a drag there in that data. Are those numbers just still showing growth gaps in China's economic drivers?
No, I think you hit the nail on the head there. China, I think to a large extent, the thing that we've been looking for out of China is really for the consumer to start to pick up their heads. And I think, it's the data that we saw earlier today is moving in the right direction. I think, a lot of the issues up until now has been because of very sort of dampened consumer sentiment. So, we'll take any rise in the right direction as far as that's concerned. But, I think in general, the market is still, even though China is trading very cheaply, we've been starting to look at a few names there. I think, we're going to have to see some more, more of a positive trend in this consumer sentiment proxies to really see the impetus getting going there and to see that market to outperform. But it's moving in the right direction. So still a bit shaky. Everyone's still a little bit on edge on what's going to happen with regards to the property sector. Things have seemed to calm down there a little bit. But still a little bit of uncertainty. And I think the market still needs to see some better data out of there before we really start to see some foreign inflows into those markets again.
Well, talking about things that are moving in the right direction, I did see the share price of Standard Bank there surging by almost 7%, the biggest gainer on the JSE today. So, of course, after they released interim results, achieving record headline earnings there, the bank rewarding its shareholders with a dividend that's 8% higher than the prior period. Talk to me about this growth momentum.
Yeah, no, great results. Obviously, the market seems to be liking it. And I think, even though, we're coming out of a high interest rate environment, consumers have been struggling. So I think the outlook going forward, just for the bank in general is a fairly good one. We saw some great results out of some of the African businesses as well, which is always a positive one. And I think investors, will definitely cheer on the 8% growth in the dividend declared. So yeah, a good story all in all there, and I mean the stock's rallied quite a bit over the past number of months. So yeah, that momentum seems to be going.
Well, something that is not a good story is the results that we got out of Exxaro today. We did see the share price sliding more than 3% as well. Revenue basically flat, but the more you went down to the bottom line, the more you saw the disappearance of that growth there. Headline earnings slumping 37%. Was this period just filled with dark spots?
Yeah, no, I think it's been a dark spot for quite a while now. But I mean, it all comes down to the issue we've had with it in the transportation sector. You know, so it comes down to a more of a macro story locally. You know, we've had issues with power crisis of late. The transport sector has been a abysmal story, and you know that has just continued. You know, I saw some data out earlier that, you know, the last year's coal volumes that they've transported on that main coal line is the lowest that we've seen in 3 decades. You know, and it's even gotten President Cyril Ramaphosa as far as also commenting on it, you know, and that there's going to be there needs going to be large intervention in that sector to try and sort that out. But I mean, it's going to be a long way to get back there. You know, there's we saw some data out recently that it's probably going to take 5 years to sort out that problem. It's going to need, you know, close to 20 billion rand of investment into sorting it out. So no, not a great one. But you know, Exxaro seems to think that we've hit bottom here, you know, as far as that's concerned. So I suppose that's a good thing if you want to take any sort of good news out of this. And I mean, along with that, we've seen a 70% drop in coal prices over the past year and a half, or almost 2 years now. A lot of it also obviously driven by China. So yeah, I think as soon as we start to sort of see the China story pick up as well, we could see the demand for coal going back, getting back to previous levels. But yeah, not a great story all around, but yeah, it could be a bottom around here.
All right. Well, we are out of time, Jacobus, but let's quickly get to your stock pick for today.
So yeah, my stock pick for today is Woolies. We've seen some quite fairly soft growth from the company over the past number of years. The most recent results we saw weren't great either. I think what's positive for us about them, you know, is it's been a tough trading environment. The food business is doing well. They've had some issues, you know, with the David Jones stuff, but that seems to be in the past now. The company is currently sort of trading around where it was 5 or 7 years ago, you know. So I think, you know, Woolies is trading currently looks good. Management seems to be confident that they'll be able to execute on its strategy, focused on capital discipline, you know, driving shareholder returns. So we think, yeah, these levels are quite good to start nibbling there and on Woolies.
All right, nice one, nibbling. Thank you so much for your time, Jacobus. That was the CIO of Schimdt Family Office, Jacobus Brink.